Hello, good morning, ladies and gentlemen. Hello, good morning, ladies and gentlemen. Before we get the session started, can I get a confirmation that you can see my screen and you can hear my voice clearly by typing hi in the comment section so that we can get the session started. So if you can see my screen and you can hear my voice clearly, kindly type in hi in the comment section. Okay, what's happening in the comment section? All right. Okay, thank you, Carrie. Good morning. Okay, all good. All right. Thank you for that confirmation. So, I want to welcome you all to yet another promising session of Extra Speed Life, hosted by my humble self, Sharif Daramola. And as usual, I will be taking you on a trading journey where we shall be evaluating the financial market using technical parameters to identify trading opportunities lining up for us at the New York session today. And it's also very important I make mention that today is a very significant day in the sense that, first of all, it's the last trading day of the week and also the last trading day of the month of September. And also, it's also the last trading day of the quarter three of this financial year, which makes it a very, very significant day. And there is a likelihood that we could be seeing something strange in the market. But during the course of this session, we shall be evaluating all possibilities that is likely going to be happening. So the first thing we're going to be doing today is to go through all the pairs we've been monitoring since Monday. We're going to look at how well these pairs are doing, and then we're going to move on to make a speculation for the day if there is any. And I think that's what we're going to be doing today. And if you have any pair you want us to look at, feel free to drop it in the comment section. So without further ado, let's dive into the chart and let's see what is happening. Well, it's obvious that we started the day on a very slow note as the pace was not that strong, but the result we've been having in the last 24 hours appears to be very, very positive for us as we head into the New York session today. So let's dive into the charts, and the first pair we are going to be looking at today is the US oil. And on the US oil here, let's do a replay of what our expectations were yesterday. We cited the scenario right around, we were around this area yesterday. Where were we? Okay, we were around the $82.50 level where we started seeing multiple rejection of this area yesterday, and we were thinking of selling the US oil. And if we look at the structure we have here in the last 24 hours, here we saw the breakdown of that bullish trend line. We saw the breakdown of the structure. Price continued to the downside as expected, though we saw price came back to do a retest of that structure during the early hours of today. So if you are taking advantage of that sell momentum right below the $82 level, you will definitely be in some profit at this point. Hold on a second. So sorry for the break in transmission, please. So as we were saying, we were expecting the sell momentum yesterday, and currently price is running in about 100 pips in profit at this point in time. And one thing I'll be saying here is to either lock in your profit or you move your stop loss to break even at this point, because I'm beginning to see a structure that is likely going to be going the other way. So I will be sharing that with you in a moment, but the first thing we want to be doing right now is to lock in your profit or you move your stop loss to break even to protect your position against any sudden pullback that is likely going to happen from this point in the market. So after locking in your profit here or moving your stop loss to break even, heading into the New York session today, how do we intend to trade the US oil? Let's scale up a little bit into the daily time frame. Let's quickly do a quick recap and have an holistic perspective of what is really going on in this market. On the daily time frame, like I showed you at the beginning of the week, it's been a bullish situation here on the daily time frame, and this is evident after connecting the series of lower higher lows to give us that resultant bullish trend line. The thick black line on your screen is the bullish trend line we were able to identify here, and as you can see, price has consistently respected that bullish trend line, not until the early days of this week when we witnessed the significant breakdown retest of that bullish trend line to give us that bearish momentum we've been witnessing since the beginning of this month. And since price has continued to go to the downside, it has been respecting this bearish trend line that has been guiding price action since the month of June. You can see after connecting the series of lower highs here, we saw how this level has been pushing price to the downside. However, since the breakdown of that bullish trend line, we can see how that bearish trend line as well has been holding price action supported at every point in time price comes within that area. So one thing I'm seeing here is a possible bullish momentum likely going to be happening with the intention of retesting that bullish trend line. Maybe, we never can tell, but the current structure looks like that. That is what I'm thinking. But the only thing that will make us buy it is if we see price break above the $83 level. So in as much as we still have a bearish momentum coming in at this point, we should keep in mind that we should also have in mind that a possible bullish momentum is likely going to be happening, considering how price started this week. We can see how price started this week here. We saw this engulfing candle on Tuesday, and this is more or less like a signal that we might be having a bullish momentum. So in as much as we are in a selling position right now, we want to put in mind that there is a possibility of a bullish momentum happening here, but that will not happen if we don't see a breakout of the $83 level. So let's go back to the lower time frame and let's see what I'm really talking about here. So now, right on the 1 hour time frame here, one thing I observed here yesterday was though we had this multiple rejection of the $3 level, which is giving us a possible bearish momentum here on the US oil, the rejection of the $81 level in the last couple of the last 24 hours is more or less giving me a change in perspective. As we can see, since yesterday's morning session, the UK session yesterday, we saw anytime price comes within the $81 area, we've been seeing multiple rejection by the buyers to push price to the upside. And in fact, it was a multiple rejection here. We saw the first one, second one, third one, then we saw the fourth, fifth, sixth, and seventh one here. Even in the early hours of today, we saw engulfing candle that took price right out of that $81. And because of this, I was able to identify a demand zone here, which I have represented with the rectangle structure we have here. So I'm seeing this area as a demand zone right now, considering the multiple rejection by the buyers. So now, with this being said, and remember, we're already in a sell position as a result of what our expectations were yesterday. We saw the sell momentum, we saw price break down this demand zone here, this bullish trend line. We saw price break down this bullish trend line, do a retest of that structure, and then price appears to be going to the downside here. So what I'm saying here is that there is a likelihood that because of this demand zone we've cited here, there is a likelihood that this demand zone could push price to break above the $83 level. And if that happens, then that means we'll be taken out of our sell position. And one thing we want to do here is to remain patient to wait for price to give us further confirmation, which is likely going to come in the form of a retest of the structure or this bullish trend line, where we look out for patterns on lower time frame to join the rally to the upside. However, if that does not happen, and remember we are still in a sell position here, if that does not happen and price continue to go to the downside and breaks below the demand zone, then all bullish momentum will be negated, as a retest of the structure will welcome another position to our existing trade. So if we see a breakdown of that demand zone, that is price action takes out all the buy position at this point, then that is more or less a good signal that the bearish momentum is still valid. So if we have a breakdown of that structure, we wait for a retest of that structure to happen, then we want to be joining the decline to the downside. So that's how we intend to trade the US oil for today. And let's see how participants in this market is going to relate with the current structure we have here, so we get ourselves prepared for any possible opportunity that will be coming in. So let me do a quick recap. I said we are already in a sell position right now, and we are in about 100 pips in profit at this point in time. And the first thing I advise that we should do here is to move our stop loss to break even or lock in some profit, so that we don't get caught up in any sudden movement that is going to be happening here. And then, as a result of the new demand zone we had identified here, after citing multiple rejection of this level by the buyers, I'm of the opinion that we might be having a breakout of that asset, of that structure at the $83 level, where a retest of that structure will be giving us a confirmation to join the rally to the upside. So this is what I'm looking forward to. And I said that if this bearish momentum continues to the downside here in such a way that we have a breakdown of this demand zone, then a retest of structure should give us a confirmation to add more position to our existing trade. So this is how we intend to trade the US oil for today. And if you have any question regarding what I've just explained so far, feel free to drop in your inquiry in the comment section, as price action is being monitored. So let's move on to the next pair here. The next pair we are going to be looking at is, let's quickly look at the GBP pairs, please. I think that was the first pair we did yesterday, but my bad. Okay, the GBP USD. So what is the situation we have here on the GBP USD? So remember 2 days ago we were expecting a selling momentum after citing multiple rejection of the 1.0900 level, and remember, since the beginning of the week, we've been seeing multiple rejection of this level. And one thing I said yesterday is that if we have a breakout retest of that level on our lower time frame, we want to be joining the rally to the upside. And lo and behold, that happened on our lower time frame. We saw the breakout retest of the structure on lower time frame. Then we saw price climb to the upside at this point. So if you are taking advantage of this move yesterday, kudos to you for being on standby to take advantage of this move, as right now you will probably be in over 200 pips in profit at this point in time. So I don't know if you have closed your position on this one. Remember, we had a take profit target zone right within the 1.110 area and the 1.1500 level. So let's see that is what we have here right now. We are in profit on the GBP USD. So if I were you, you might want to close your position here as we begin to see situations here that looks more like a reversal pattern at this point in the market. So now that with this information we have here, how do we intend to trade the GBP USD during the New York session today? So going into the New York session today, do we still have a trading opportunity lining up for us on the GBP USD, or are we going to pass this trade? Well, let's scale up to the higher time frame and let's see what structure we have here, after which we will be making our decision here. So look at the structure we have here on the 4 hours time frame. We can see that price action is bearish. We have a long-term bearish momentum here on the GBP USD. And look at what happened a couple of weeks ago. I think last week we saw the breakdown of this demand zone that has been holding price action supported for a while. So we saw the final breakdown of the structure last week, and from a technical standpoint, whenever we cite a breakdown of structure like this, we expect that price is likely going to come back and do a retest of the structure with the intention of pushing price to the downside. So the move that we enjoyed yesterday or since the beginning of the week appears to be a retracement move of this impulse leg. So now that we have this retracement move back into this area, and we started citing multiple rejection of the 1.2280 level, there is a likelihood that we might be having a reversal pattern. We are having a reversal pattern here with the intention of a bearish trend continuation. And in order to do that, what we want to do here is to take into consideration this impulsive move to the downside. So we had this impulsive move that broke to this point, and what we want to be doing here is to be identifying somewhere between the 50 and the 78.6% of that previous impulse leg as an area we want to be looking for selling opportunity. So bringing out our Fibonacci retracement tool and running it through here, run through this level, and we have somewhere between the 50 and the 78.6% retracement of that previous impulse leg as an area we want to be looking for selling opportunities. So what this simply is saying here is this: we have this impulse retracement back into this level. So we want to be looking for reversal pattern within this area to look for selling opportunities to join the decline to the downside. So this is how we intend to trade the GBP USD today. So let's delete this one as this is no longer relevant, and this one too is no longer relevant as well. So let's delete this, and let's see. So let's scale down to much lower time frame and let's see what is really happening around this area. How we're going to be having a reversal pattern that will be supporting a trend continuation to the downside. This will get an answer on the lower time frame. So right now we are on the 15 minutes time frame right now, and let's see what we have here. So looking at the current structure we have here, we can see we have something that looks more like a double top structure, which is more or less a reversal pattern. We can see the first touch here, price came here, we saw the second touch coming in. And one thing I will be saying here, we want to wait for this pattern to fully mature before we want to be joining this trade. So how do we know this pattern is going to mature? Well, the first thing we want to do here is to bring out our line chart. Let's identify a neckline for this reversal pattern, after which we'll be using the neckline as our yardstick for any entry opportunity. So we have our neckline sitting around the 1.10900. Hold on a second. We have 1.10900 level, which I want to place right at the bottom right hand side of my screen, so that hold on, what happened there? Okay, I need to make this black. All right, so we have it here. So what we are going to be looking forward to right now is a breakdown of that structure to give us that bearish signal. So we had the double top structure here. Price comes back into our neckline, climbs up a little bit again, and then if we cite a breakdown of the 1.10900 level, then that's the signal. But remember, we don't want to get too excited at the sight of such signal, as we want to wait for confirmations to happen, which is likely going to come in the form of a retest of the structure, after which we look out for patterns on lower time frame to join the decline to the downside. So this is how we intend to trade the GBP USD. If you have any question regarding what I've just discussed, feel free to drop in your inquiries in the comment section. Let's see what's happening in the comment section. So let's move on to the Gbp Jpy. And on the Gbp Jpy too, we also had a similar scenario here on the Gbp Jpy, which we took advantage of a buy opportunity right above the $157 area, and price move. Let's see how many pips that is. Price move about over 300 pips in our favor on the Gbp Jpy too as well. And from the look of things too, here on the Gbp Jpy, we are beginning to see that a bearish momentum is coming in here. And so what am I saying here? Look at this. Look at the structure here on the 1 hour time frame. We saw this impulsive move to the upside. Price broke above the $157 area, got into the $162 area, and we started seeing something that looks more like a reversal pattern in the form of a double top structure. And when we cite a double top structure like this, what we do next is to identify the neckline of this double top structure. And if we bring out our line chart here, connecting this point together to identify the neckline of the structure, we have somewhere around the 160.200 area, which we'll have to label here for the sake of clarity. So we have the 160.200 area here. And one thing of course we are going to be looking forward to is that bearish signal, which is going to be coming in the form of a breakdown of the structure. So if we have a breakdown of the 160.200 area, we don't want to get too excited. Remember, we want to wait for price to give us further confirmation, which is likely going to come in the form of a retest of the structure on lower time frame, after which we look out for patterns to join the decline to the downside. So on the Gbp Jpy, we also have a similar scenario with what we had on the GBP/USD. So we want to be selling right below the 160.200 area. That is after the breakdown of that structure happens, with a take profit target sitting around the 156.00 level. We should be dovetailing to over 400 pips to catch from this point. So that is how we intend to trade the Gbp Jpy for today. Remember, we took some profit here. We took over 300 pips in profit here, and let's see if we're going to be taking another move right to the downside on the Gbp Jpy. So if you have any question regarding what I just explained so far, feel free to drop in your inquiries in the comment section, and I will be willing to be of help in that regard. So 9964, good morning to you. Innocent babe, oh, you're around. How are you today? All right, so that is how we intend to trade the GBPY for the New York session today. Let's get ourselves prepared to take advantage of that move when it finally happens. Now, moving on, we moved on to talk about the US tech. And what do we have here on the US tech? Remember, we had this bullish expectation since the beginning of the week, considering the fact that price has been on a very strong demand zone for quite a while now, which I will be sharing with you in a moment. But before I go into the details of how we got into that bullish expectation here on the US tech, I think it's appropriate that we quickly do a replay of what we were looking at yesterday. So as at yesterday, we were around this area. We were around here yesterday, around the $11,350 area, where I was explaining to you how we took advantage of this move a couple of days ago, which took us to around the $11,550 area, which was about how many pips that is? Around 330 pips. And then I told you how this move that we witnessed during the course of yesterday is more or less going to be a retracement of the previous impulse leg, after which we identified the buy zone around this area, where we said we are going to be looking for another opportunity to buy the US tech. However, what we witnessed during the New York session yesterday was quite massive, as we saw this leg move right below the buy zone area and rejected the $11,000 zone one more time again before we started seeing this engulfing candle rising right back above that key level. So remember, we had this key level So let me delete the buy zone that we identified yesterday. So remember we had this key level at the $11,200 area a couple of days ago, and I told you that anywhere right above the key level will be most appropriate for us to be buying the US tech, considering the fact that we are on a very strong demand zone. And right now price is right back above the $11,200 level, and I took advantage of this move again this morning with my stop loss move right at my entry point at this point to protect my position, because we never can tell what is likely going to be happening at this point. So let's scale up to the higher time frame and let's see how we got to this point, and let's see what our expectation is going to be like for today. So on the higher time frame, let's go to the daily time frame. For instance, we're on the daily time frame. It's obvious that price has been bearish since the beginning of the year, but one thing that caught our attention that made us look for buying opportunity is the situation we cited here at around the $11,200 level. And what happened there? We can see every time price comes within that area, we started seeing multiple rejection by the buyers to push price to the upside. So the first scenario happened in the month of June, then the second scenario happened again in the month of July. So we can see how this level has been a major determinant of price action for the buyers pushing price to the upside. And as soon as price got to as far as the $13,600 area, we saw another move back to the downside. And what happened? Price came exactly back into the zone that was respected in the month of June stroke July of this year. And what happened when price came in that zone? We started seeing multiple rejection of this level in the last 1, 2, 3, 4, 5, 6. In the last 6 days, we've been seeing multiple rejection of this area to give us a clue into the strength of the buyers at this point in the market. So with the multiple rejection around this area, we started thinking of buying the US tech, considering how strong that level has been in the past. So we are looking forward to a buy opportunity in such a way that price climbs to the upside. As long as we don't have a breakdown of this demand zone, we will continue to look for buy opportunity. So to make our job easier during the trading hours, I was able to identify a key level for us on the lower time frame, and that is the 1 hour time frame here. And we identified a key level right around the $11,200 area, where we said if price continues to rally right above this level, we want to be comfortable in our buy position. As you can see, we are right above the demand zone at this point. So we want to remain bullish on this one if price continue to rally above the $11,200 level, as long as we don't have a breakdown of this demand zone. Remember, if we have a breakdown of this demand zone, then definitely we want to be looking for bearish opportunity at a retest of the structure. But in the last 72 hours, or since the beginning of this week, we at no point has price broken down that demand zone. Hence, we want to continue to aim at a bullish opportunity. And so where will our take profit target be at this point? Well, our take profit target has not changed. We still have our take profit target right around the $11,650 area and the $11,900 area, which we are seeing as we should be dovetailing to a minimum of 400 pips to catch here and a maximum of about 600 to 700 pips here. So let's see how price action plays out on this one. So if you are in the trade here already, move your stop loss to break even to protect your position as we continue to look forward to price climbing right above the $11,200 area. So that is that on the US tech. If you have any question regarding what I've just discussed, please feel free to drop in your inquiries in the comment section while I move on to the next pair. So the next pair we are looking at is, I think is the XAUUSD, right? Let me see what happened yesterday. All right. Okay. I want to see what happened yesterday. I think it's the XAUUSD we did. Okay, we did the gold. So let's go on to talk about the gold. So now on the gold, did you take that profit yesterday? I hope Nina is around. Is Nina around? All right, so we were around this area yesterday when we were deliberating on the gold. We were around here, around the $1,647.50 level. And one thing I told you is that despite the fact that we had a sell window identified here, Remember, we took advantage of the sell opportunity a couple of days ago as price continued to move in our favor, and we were about how many pips in profit yesterday? About over 1,000 pips in profit yesterday, while I told you to move your stop loss to lock in some profit. And the first thing we did yesterday was to lock in some profit, and the reason why we locked in some profit was simply because of the scenario we saw here. We saw the structure around this $1,640 area, which looks more like a reversal pattern. And one thing I said here is this: considering the impulsive move we saw here on Tuesday, we saw this impulsive move on Tuesday breaking out of this proposed neckline, and then price came back to do multiple rejection right above the $1,640 area. I said, okay, with this kind of scenario we have in here, we might be looking forward to a bullish opportunity. And one thing I did yesterday was to identify somewhere right above the $1,647.50 area, which is around here, to look out for buying opportunity. And what happened afterward was very, very massive, as we saw a breakout, multiple rejection of that level, and then we saw that move right into this area, which gave us about 1,300 pips in profit on this one. Remember, as this move went up to the upside, we were taking out all of the sell position here, which was also in profit. And one thing we'll have made here, we've made quite a lot of money on the XAU USD. So that is that on the XAU USD. That was our expectation, and thank goodness price moved as expected. So now going into the New York session today, what is going to be our plans? Well, it's very simple. We have a very simple setup here on the XAU USD, which I would be following. And that, what is that? Well, since we enjoyed this profit yesterday, we saw this impulsive move to the upside, price breaking above that $1,660 level, which also lines up with the bearish trend line we identified on the higher time frame. And then what did we see? We saw a breakout, multiple rejection of the $1,660 level, and I joined the rally from this point. And presently I'm in profits here. And one thing I did as soon as I was in profit is to move my stop loss to somewhere around my entry zone so that I can lock my position against any sudden reversal that might likely happen from here. Remember, we are still within that sell window we identified here on Monday, and we never can tell if that sell momentum will come in anytime soon. So one thing I did here is to move my stop loss to break even area. And if you are taking advantage of that, move the breakout retest of that trend line, then kudos to you for taking advantage of that move. And let's see what we are going to be doing during the New York session today on the XAU USD. So in order to get a better perspective into this, let's scale up to the 4 hours time frame and let's see what we have there. So on the 4 hours time frame, what do we have on the 4 hours time frame? This is what we have on the 4 hours time frame, and we can see price has been on a very strong bearish momentum for quite a while now. I think it's up to 6 months now. And one thing we noticed in the month of August rather, we had a demand zone which was respected quite for some time between the month of August and the early days of the month of September, before we finally saw the breakdown of that demand zone a couple of weeks ago. So with the breakdown of that demand zone, of course, that is a signal that price is likely going bearish. And what did we see afterwards? We saw price continue to go to the downside, thereby reaching as far as the $1,615 area, which we took advantage of on Tuesday. And then price appears to be climbing back up, which I'm seeing as with an intention of retesting the structure that was broken last week. So remember, we had the structure broken here last week. So there is a likelihood that price is likely going to come back into the structure with the intention of probably rejecting that bearish trend line to send price crashing to the downside one more time. So this is what I'm looking forward to. So, and that is why I have placed my take profit target somewhere around the $1,700 area, which also lines up with the demand zone that was broken last week and also the bearish trend line that we have here. So this is what I'm looking forward to here on the gold. So let's see how price action is going to play out in this regard. Now let's scale down to the 1 hour time frame and let's see if we could identify an entry zone for those who had missed out on that opportunity that we took advantage of yesterday. So scaling down to the 1 hour time frame, what can we see here? So on the 1 hour time frame right now, we can see that price is right above the $1,660 area to insinuate a bullish momentum here. So one thing we want to see is that we want to continue to be in a buy position as long as price remains right above the $1,660 area. So in this kind of scenario right now, we have the setup that happened between the last 24 hours. We saw this move, a breakout of the $1,660 area. Price came back to do a retest of that structure. We saw a breakout of the previous structure here to the upside, and it appears we're having something that looks like a retracement phase back into the previous structure. So what I'll be saying here is that let's identify the previous structure here and use that as a yardstick for another opportunity to join the third wave. I think we had the first wave here, we had the second wave here, and there's likely the third wave here. So somewhere around above the $1,665 area seems most appropriate to be joining the trend continuation here. So above this area looks more promising, with the take profit target sitting right around the $1,700 area. And as price moves accordingly, ensure you move your stop loss to protect your position against any sudden pullback that is likely going to be happening here. So that is how we intend to trade the XAU USD for today. So moving on, let's move on to talk about the USD JPY. Well, the USD JPY has been very interesting since the beginning of the week. As we can see, price has been caught within the sell window we identify on the higher time frame, and since the beginning of the week, price has refused to leave that area, as all attempts by the buyers to push price right above the 145 Japanese yen level has been met with stiff resistance by the sellers. And as you can see, with the current consolidation phase right here, shows how much the sellers have been trying to push price to the downside. So it shows that buyers are trying to push price up. But one thing that happened is that we've been seeing multiple rejection of that area, and it gives us a clue into the strength of the sellers at this point. And during the course of live session yesterday, we were around this point. During the course of the live session yesterday, where were we? I think we were around here. We were around here during the course of the live session yesterday. And one thing I said here on the USD JPY is that we should be looking for selling opportunities right below the 144.600 area. And what happened afterward was quite interesting. We saw price come back down into the 144.200 area, come back up again, and then come back down. So right below the 144.600 area has been more promising for selling opportunities. And one thing I'm looking forward to this week today is the possibility of price breaking down the 144.200 area. And if price breaks down the 144.200 area, if price breaks down the 144.200 area in such a way that we have a breakout of the structure, a retest of the structure will be welcoming another position to this trade. And like I said yesterday, the USD JPY is looking very promising, as we have the tendency of having multiple entries here on the USD JPY. So let's see how this is going to go as price action is being monitored on the USD JPY. Before I go ahead to talk about the next pair, let me quickly share with you what the structure was looking like on the higher time frame that led to us thinking of selling opportunities here on the USD JPY. So in that regard, I will move on to the daily time frame, and let's see what is happening on the daily time frame. Well, on the daily time frame, price has been on a very strong bullish momentum. As you can see, we have this strong bullish trend line after connecting the series of higher lows here to give us that resultant bullish trend line. And one interesting thing that happened during the month of July was that we had this impulsive move to the downside, which respected that bullish trend line one more time, evolving into a reversal pattern in the form of a double bottom structure. And within that month of August, we saw the significant breakout of that structure as price moved to as far as the 145 Japanese yen area. And you all know that from a technical standpoint, whenever we sight a breakout of the neckline of a reversal pattern like this, we expect that price will come back into the neckline at one point in time to do a retest of that structure with the intention of sending price to the upside. But since the breakout of that structure happened in the month of August, we are yet to see price come back into the neckline. And in that, because of this situation, we are looking, okay, when will that happen? Is there going to be that scenario that we're going to be having a retest of that neckline? Well, something interesting happened since the beginning of this month as we continue to see multiple rejection of the 145 Japanese yen level. So we saw how this level has been rejected since the beginning of this month by the sellers to give us a clue into the strength of the sellers around this area. And if we scale down to the 4 hours time frame here, we begin to see things more clearly. So here on the 4 hours time frame, a reversal pattern was identified here, and it looks more like a double top structure, like a triple top structure, which appears to have evolved into a quadruple top structure, if there's something like that. We saw the first test, we saw the second test, we saw the third test here, and since then we've been seeing multiple rejection of that supply zone since the beginning of this week. And one thing I also shared with you at the beginning of the week was that we saw this impulsive move to the downside, breaking down that bullish trend line here, breaking down the neckline of that reversal pattern, and then a retracement back into retesting that bullish trend line is more or less a signal, a clue that we might be having a bearish momentum in the nearest future. And since the beginning of the week, we have seen price do a consolidation phase right around that supply zone area, and we're still waiting for that impulsive move to the downside to happen. So when is it going to happen, we don't know, but at the moment we are still in a sell position here on the USD JPY, and we hope that things will continue to move in that direction as time evolves. So right now we are right below the 144.600 area, which is an area I told you looks more comfortable for us to be in a sell position here. And let's see how price action plays out during the New York session today. And what I said is that if we have a breakdown of the 144.200 area, a retest of that structure should give us a confirmation to add more position to our existing trade. So that is that on the USD JPY. If you have any questions so far, feel free to drop in your inquiries in the comment section. Let me quickly run through the chat and see what is happening. Okay, innocent babe. All right, thank you for that compliment. I hope you took some profit yesterday on the gold. Okay, so let's move on to the next pair, and I think that will be the last pair we are going to be taking for today and this week as well. So the next pair we are going to be looking at is the Chf Jpy, which also have a similar structure with what we have on the USD JPY. And what we have here on the Chf Jpy, we remember we were around this point yesterday where we were looking for selling opportunities. Where were we? Okay, we were around here. We were around here yesterday, and I told you that we should be selling the Chf Jpy as price continued to oscillate right within the sell window we identified here on Monday. And the sell window also shares a confluence with the neckline of that reversal pattern. So we have the neckline at the 148 Japanese yen area. Remember, we had this reversal pattern. Hold on a second, let me show you. So we had this move, we had this multiple rejection of the supply zone here, and then we had a neckline at the 148 Japanese yen area. We took advantage of the structure to the downside last week. We took about 400 pips thereabout on this one, and then price appears to go through a retracement phase back into our golden zone area, which is right within the 50 and the 70.6% of that previous impulse leg. And I said if price comes within this area, we want to be looking for opportunity to sell the Chf Jpy. And to make our job easier for this week, I was able to identify this neckline area, as our key level for the week, as anything right below the 148 Japanese yen area is most appropriate for us to be selling the CHF JPY. And see what has happened in the last 24 hours. Though we had the break above a little bit to the upside, and as soon as price got into the 148.500 area, we saw how price broke back down that key level, the neckline area at the 148 Japanese yen, to be moving to the downside. So currently at this point in time, though it's very slow since the beginning of the week, we are just running with about 36 pips thereabouts, and we are still hoping that price will continue to the downside from this area. So let's see how price action plays out during the New York session today. Our take profit target still remain right within the demand zone here at the 144 Japanese yen area. So let's see if we are going to be hitting our take profit target before the end of the week on the CHF JPY. So this is what we are looking at, and I'm also holding on that selling position for the CHF JPY. So on this note, I would want to do a quick recap before I call it a day. So what do we do here? Okay, Innocent Baby saying something here. All right, let me see. Sure, I make some profit. Oh, great. I'm glad to hear that you made some profit. And I want to, about BTC, it's still bearish. I want to know more about BTC, if it's still bearish, and which price can we energy the market. All right. Okay, let's look at the BTC USD then before I do the recap for today. So on the BTC USD, what do we have here? All right, let's scale up to the daily time frame and let's see what is really happening on the daily time frame. And if we look at the daily time frame here, obviously the Bitcoin has been very bearish since the beginning of the year, and as a result of this, I was able to identify this resultant bearish trend line after connecting the series of lower highs here to give us that trend line, and that trend line will definitely be our yardstick going forward. However, if we zoom into what has been happening in the last 4 months here, that is from the month of July, we can see that price was caught within a channel after testing that bearish trend line. So we had this impulsive move to the downside since the month of April. Price came to as far as the $17,500 area, and what happened after that was a multiple rejection of that level, giving us a clear into the buying pressure from the $17,500 area. We can see anytime price comes within the $17,500 area, we see buying traction. So what this simply tells us is that the $17,500 area is more or less a very strong demand zone at this point, as it has a memory for buying power. So with the demand zone sitting around the $17,500 area like this, let me show you so we can see multiple rejection of that area. We saw the first one, we saw the second one in the month of July, we saw the third one here, and then in the month of September, during the early days of this month, we saw another rejection here, and in the last 2 weeks now, we've been seeing multiple rejection of that $17,500, giving us a clue into the strength of the buyers at this point in time. So for me personally, on this one, on the BTC USD, we might be looking forward to any buying opportunity here on the Gbp USD, considering the fact that we are on a very strong demand zone. And if I want to sell the GP USD, if I want to sell the BTC USD, I want to be seeing a significant breakdown of this demand zone. That is, price breaks down that demand zone significantly well, taking out all the buy position here. Then I want to be waiting. Remember, we are not getting too excited when we see a signal like this. We want to wait for confirmations to happen, which is likely going to come in the form of a retest of that level, after which we look out for patterns to join the decline to the downside. And if we look at, if a breakdown happens and a retest happens, you can see the retest of structure also lines up with the bearish trend line that we identified on this higher time frame here. But from the look of things, it doesn't look like price wants to break down the structure. As you can see, since the beginning of the week, in fact, if we go for as far as 2 weeks ago, we can see how price has been rejecting the is it the $18,000, $17,500 area since the last 2 weeks here, giving us a clue of how strong buyers are at this point in the market. So in order to make things easier, I was able to identify a key level right around the 18,500 level, which is more or less a very strong psychological level considering the round figure of this price. So right now, anywhere right above the 18,500 level seems most appropriate to be buying the BTC USD. But in order to trade this now from a short-term perspective, we will need to scale down to the 1 hour time frame, and let's see what is really happening on the 1 hour time frame, after which we will use the structure we see there to identify a trading opportunity. So now on the 1 hour time frame, what do we have? You know what I'm going to do here? I think I'm going to retract this demand zone so that we can have a clean. We all know that we are in a demand zone, right? So I don't need to put that in. So one thing I want to be looking forward to at this point right now is this. You can see the $18,750 level. You can see how important that level has been in the past. We saw this rejection here, rejection, rejection, sharp rejection. So if price comes back to that area, we want to buy again. So anytime price comes within that area, unless price breaks down that level, we want to be buying. If we see price reject this, comes back into the $18,750 area, to buy the BTC USD. However, if price does not come back down, that is, price does not come back down, then how do we trade this? Well, if we look at the current structure we have here on the 1 hour time frame, and we should bring out our line chart to identify a key level, we can see that somewhere around the is it the $19,600 area? Yes, 19,600. We have this area, $19,600, and let's label that area for the sake of clarity. So we have the $19,600 level. So going forward, or going into the weekend, we could be looking at this area as an area to look out for selling opportunity, in the sense that we have this impulsive move to the downside. We have this impulsive move to the downside. Price comes back to do rejection of this place. So we had multiple rejection of this area. So we can see how that area has selling power. We can see that we have selling power from that area. So we might be selling back into this area, buy from this area, back into this area, sell back into this area. We don't know. That is how the structure is giving us right now. So if we are going to be selling, we sell right below this level or somewhere around this area. We sell, have our take profit target at around the 18,750 area, somewhere around there, dovetailing to about 830 pips. That is that. So we can sell around this area with our stop loss right above the structure here with about 200 pips thereabout. So we have our sell opportunity here, and if price comes back into the 18,750 area here, we look out for buy opportunity. So we are right in a consolidation phase right now on the BTC USD. So this is how we want to be trading the BTC USD. So we have our stop loss right below this area. So if price breaks down, we sell. Price comes within this area, we buy to the upside. However, there is a caveat to this. If at any point in time we cite a breakout of the $19,600 area, and that is likely going to be a signal that the bullish momentum is coming in. But remember, we are not getting too excited when we cite that breakout of that structure, as we want to wait for price to give us further confirmation in the form of a retest of that structure, after which we look out for patterns on the lower time frame to join the rally to the upside. So this is how we want to trade the BTC USD. Buy above this area if a breakout of structure happens, and continue to sell if we see rejection of the $19,600 level. And at that point in time, it's looking more sellish at this point, if there's any word like that. So it's looking more sellish here. So sell, have your take profit target somewhere around here. Move your stop loss accordingly as price moves in your favor. And if price comes here, you want to buy to the upside. So that's how the BTC USD is looking right now from the 1 hour time frame. I hope I made myself clear here, innocent babe. All right, I'm not sure. Are you still in the room? Okay, so let's quickly do a recap of what we talked about today before we call it a day. So the first pair we looked at today was the US oil, and what was our expectation on the US oil? We were looking at we are in a sell position on the US oil. Remember, we sold this position right below the $82.50 yesterday, and I told you we are in profit on the selling opportunity we have here on the US oil. And one thing I said is that we should be moving our stop loss to lock in some profit at this point, And right now we are in about, I think, 140 pips there about in profit. And one thing that caught my attention during the early hours of today was the multiple rejection of the $81 area, which resulted into identifying this area as a demand zone. And because of this, I'm the opinion that there is traces of buying potential here in the market. And as a result of this, I was able to identify the $83 level as our key level for any buying opportunity. So if we cite a breakout of that $83 level, which also lines up with the bullish trend line here, then a retest of that structure will be giving us further confirmation to join the rally to the upside. So what this simply means is that though we are in a sell position here, we've moved our stop loss to lock in some profit. If price breaks above, that means we'll be taking out of our sell position, and at the same time giving us a bullish signal to take advantage of when price does a retest of the $83 level. So this is how we intend to trade the US oil going forward. Then we went on to talk about the GBP USD, where we took advantage of a buy opportunity here yesterday. We took advantage of this move yesterday at a breakout of the structure, and we took over 300 pips on the GBP USD. However, the current structure we have here right now is looking more bearish. As we can see, following the impulsive move to the upside, we begin to see a structure that looks more like a reversal pattern in the form of a double top structure. And with the reversal pattern cited here, the next thing we did here was to identify a key level right around the 1.10900 area, and we are waiting for that level to be broken. But with the look of things right now, it appears the level has been broken to the downside now. And remember, we are not getting too excited. We want to wait for price to give us further confirmation in the form of a retest of structure, after which we want to be joining the decline to the downside here on the GBP USD. So that is that on the GBP USD. So we are selling the GBP USD after taking some profit on our buy position yesterday. Then we went on to talk about the Gbp Jpy, which also shares a similar setup with what we have on the GBP USD, and we can see we took advantage of this move yesterday to the upside. We took this impulsive move to the upside here, which dovetailed to, let's say, about how many pips that is, at least a minimum of 400 pips to be caught here on the Gbp Jpy. But one thing interesting has been happening in the last 12 hours now. We saw how price has consistently rejected the 160 Japanese yen level to evolve into a reversal pattern in the form of a double top structure, just exactly like what we saw on the GBP USD. And as a result of that, we were able to identify the neckline area at the 160.200 area, which we're expecting that price will break down that structure, which it has already done at this point, where a retest of structure will be giving us further confirmation to join the decline to the downside. So we have our take profit target sitting right around the 156 Japanese yen level, which will be dovetailed into a whooping 450 pips there. So that is that on the GBP USD. So we are looking forward to selling opportunities here on the GBP USD. Then we went on to talk about the US tech, where we were actually looking out for buying opportunity, considering the fact that price is right within a strong demand zone that we identified on the higher time frame. And one thing I told you here is that somewhere around the 11,000, above the $11,200 area, looks more promising to be buying the US tech. So I told you I took advantage of this move this morning, and I have moved my stop loss to break even, as I want to protect my position. And let's see if price is going to break back down the 11,200, and if it doesn't and price continue to the upside, then it's going to be good for us. Remember, we took this move 2 days ago, we took some profit here 2 days ago. Price came back down, coming back into our entry zone again, and we are looking to buy this US tech right above the 11,200 area. And I made mention that the only way we want to be selling the US tech is if we cite an outright breakdown of that demand zone that we identified on the higher time frame. So what this simply means is that if we see a breakdown of the $11,000 area, a significant breakdown of that level, that is price closes below that level, taking out all the buy position here, then we want to wait for price to give us a confirmation in the form of a retest of structure before we want to be joining the decline. So if that does not happen, that is price does not break below the 11,200, we want to still be looking for buying opportunity here on the US tech. Then we went on to talk about the gold, and on the gold, we took advantage of a bullish momentum here on the gold Yesterday, we took about 1,300 pips after being stopped out in our sell position, where we also took some profit too as well, because remember we locked in some profit on the sell position we took 2 days ago before we joined the bullish opportunity here. And one thing we saw during the early hours of today was a significant breakout of that bearish trend line. So we saw the breakout of this trend line here, retest of that structure. We took advantage of this bullish move. I told you I took advantage of this bullish move this morning. I moved my stop loss to break even area, and I said, for those who missed this move, we have a level right around the 1,600 and let's see, 1,665. Let's label that so that we can have let's label it $1,665 level. So we have the $1,665 level, and I told you that if you missed the opportunity we took advantage of this morning, then you could be taking advantage of a bullish opportunity right above that level, which is stop loss right around the $1,660 area, and then we should be aiming at around the $1,700 area as our take profit target. So if price continues to move in our favor, remember you want to move your stop loss accordingly to protect your position against any sudden pullback. And the reason why I've said that we should move our stop loss is simply because if we look at the structure we have here on the gold since the last couple of months now, we can see that we are on a very strong bearish momentum, and as a result of this, any bearish momentum could be coming at any point in time. So in that regard, we want to be on the safer side. So if price continue to move in our favor to the upside, we want to be locking in our position by moving our stop loss. However, if this situation transposes into something like an inverse head and shoulder, like an head and shoulder pattern like this, we already have the left shoulder here, and this turns out to be the head, then comes back down again and recites a right shoulder here with a breakdown of the $1,660 level. Price does a retest of that structure, then we want to be joining a decline to the downside. So we have to be very, very fluid with our trades, because anything can actually happen at this point in time. So if this structure here evolves into a head and shoulder pattern, we want to be ready to join the decline to the downside on the gold. So that is that. I don't know if I'm very sure you should understand what I'm explaining here. So let's move on to the next pair. The next pair is the USD JPY, where we've been seeing selling momentum happening since the beginning of the week as price continue to oscillate right within the sell window we identify at the beginning of this week. So we can see how sellers has been rejecting this 145 Japanese yen level since the beginning of the week, giving us a clue into the strength of the sellers. And one thing I said yesterday was that anywhere below the 144.600 area is looking promising to be selling the USD JPY. And going into the New York session today, if at any point in time we cite a breakdown of the 144.200 area, price retest the 200, retest that level, we want to be adding more position to our existing trade to join the decline to the downside. And then we close the day with the CHF Jpy. I think, okay, the CHF Jpy, we are within a sell window on the CHF Jpy here, and we have a key level at the 148 Japanese yen level, which is serving as our neckline of the reversal pattern we had here last week. Remember, we had this reversal pattern. Hold on, sorry. Remember, we had this reversal pattern here last week, and then we had the neckline at the 148 Japanese yen area, which was broken to the downside. Remember, we took advantage of this move last week. Price broke down that neckline, and we had this sell window here where we said price is likely going to come back into this area where we want to be taking advantage of a trend continuation to the downside. And right now it appears price is moving according to plan. So what we want to be doing here is to remain positive as long as price continue to stay right below the 148 Japanese yen level. So that is what we did so far today, and I hope we are well prepared to take advantage of any of these opportunities that we were able to analyze during the course of the live session today. I really appreciate every single moment with you guys. It was such a wonderful time, and I look forward to seeing you on Monday to look at the financial market together one more time. So on this note, I want to wish you best of luck during the New York session today, and as well I want to wish you a wonderful weekend and happy new month in advance. Bye bye.